You must have seen ads by different banks calling for people to invest into shares, and maybe you don't even understand what it means and how to invest, what are the benefits of investing in shares, and all of those questions. This is what I want to show you in today's video. What is equities, or what are equities? It means shares or stocks, and it is percentage ownership in a public quoted company. What does that mean? So this is a company. The company needs capital to run its business, right? And because it's a PLC company, public quoted company, it has the opportunity to make a call to the members of the public to invest. So they made an announcement and several people invest into the company. Several people invest into this guy or this company, right? What is the benefit of investing into this company? When you invest into the equities of a company, what you're saying is, I am ready to partake in the profit as well as the losses that you make. So you cannot take profit and not bear losses sometimes in equities, which is what makes equities a medium risk investment. You get your own share of the company's profit called dividend. Currently, a lot of Nigerian companies pay dividend twice a year. One is called interim and the other one is called final. Interim dividend is the dividend paid from half-year profit. Usually, all corporations run a 12 calendar month accounting cycle, meaning that they do their accounts, most of them January to December. Let's assume that the accounting cycle is January to December. They would pay interim dividend from the profit of January to June. So once it's June, they close down temporarily, really not close down, but they do their accounting and balance their books. Whatever profit they make for that period, they pay part of it based on the units that you have as interim dividend. Then at the end of the year, January to December, they do another account, that is the full year account, and whatever profit they make, they also give you a share of the dividend, which is called final dividend. So if you have 1,000 units in a company, let's say this company is called X Limited. You have 1,000 units of shares in X Limited. Your name is Tade, and Tolu has 15,000 units in the same company. At the end of the year, if the company declares, say, 1 naira, this is how announcement for dividend is always made. They may say 1 naira payable, 1 naira for every share that you have, 1 naira per unit. So the implication is that this guy would get 15,000 naira as dividend, while you get 1,000 naira, because it's 1 naira times 1,000, 1 naira times 15,000. The more units you have, the better for you. So what you should do is create a plan to invest monthly into the shares of companies that you have identified as high growth companies. That is one way that you make money from shares. The other way is called capital gain. What does that mean? So let's assume when you bought your 1,000 units in X Limited, let's say you bought it at 50 naira per unit, meaning you paid 50 times 1,000. That is 50,000 naira, 50K is what you paid. 1 year down the line, the share price of X Limited went up to 120 naira per unit. It now means the market value of your share is now 120 naira times 1,000, which is 120,000 naira. So you invested 50,000, your investment grew to 120,000. So if you take 120,000 minus 50,000, you have 70,000. That 70,000 is called capital gain. So those are the two ways you make money from shares, from capital gain and dividend. But the interesting thing is sometimes some companies declare bonuses. For every unit that you have, we are giving one additional unit, one for every one that you have. So it means that your new portfolio would have 2,000 units of those shares. So the other question will now be, how do you start your journey to invest in shares? It starts with opening a stockbroking account. Stockbroking account. There are over 200 stockbroking firms currently registered with SEC in Nigeria, SEC and NGX certified. So you can go on SEC's website or NGX website to find out the list of accredited brokers. Open an account with them. When you open an account with them, they'll give you username and password, login details to be able to access their own dashboard. From that dashboard, you can now buy any shares in any company of your desire. However, the last piece of information I want to drop on this is, for you to now invest in shares, what are the primary considerations? I have 5 metrics that I want you to look out for before you invest in the shares of any company. Number 1 is industry news, industry outlook. So it's not enough to just invest in any company. What is the outlook of that industry? It's very important. Number 2, dividend history. The company you are seeking to invest in, you want to investigate if they've paid dividend consistently for the last 5 years. If they've paid for the last 5 years, there's every possibility that they will pay again. The third is historical movement of the share price. Historical movement of the share price. What does this mean? In the example I gave of this X Limited, you bought it at 50, but it went to 120. You want to check for that growth trajectory, at least in the last 3 to 5 years. If it has grown before, it is likely to grow. It's just all speculation, right? But you want to do your homework well. The fourth consideration is leadership. If you don't trust the leadership of the company that you want to invest into, you shouldn't invest. The last primary consideration, at least for me, is financials. So you want to check what is the profit of the company in the last 5 years, asset size, how have they done financially in the last 5 years. The good thing is all these metrics can be checked through a tool that is called investing.com. It's a free tool. And this is not a promotion for them. I use it as well, investing.com. You can go on the website, check all these metrics for any company you want to check. It's not just for Nigerian companies, for all companies globally. You can see at least 2-year data of any company on investing.ng. This helps. See you later.